Today we're going to discuss a little bit about real estate. You know, I'm technically a real estate investor, right? We own this house, owned it for many years. But you have to backtrack. Everyone thinks real estate, real estate, real estate. Most people lose money. And when I say lose money, then money would make more money if it was just in a regular index fund in the S&P 500 rather than owning a property, owning the property that they own. And it's a big hassle. There's always maintenance and everything. So if you're big and you have property managers and everything, that costs money. But talking about just a simple, most people are involved with the small deals. It's just, unless you know exactly what you're doing, it's really just not worth it. Warren Buffett famously doesn't invest in any real estate. There's an idea that based on what we discussed in the past on the diversification about the Gemara says karka, shlish b'karka, a third of one's assets should be invested in karka and ground. According to some, that means real estate. You know, but real estate is a very great place to invest money. I look at my mother, they've owned the house for around 25 years now, I guess. And it's a nice house. The value around doubled in a half from what it was around. If you look at the stock market and the S&P 500, you would have put your money in the top 500 companies of the stock market, just get a simple index fund in the S&P 500, the money would have went up significantly more than 2.5 times. You Google it, you'll see. You Google, I'll do it for you right now. You Google Dow Jones, it's a general stock market, and you go back to 2000, it was 10,000, now it's 45, 46. I mean, that's just a quadruple. Real estate just didn't perform like that. It just doesn't. That's why the stock market is really, truly so special. There are tax advantages of real estate if you know what you're doing, but the truth of the matter is real estate is also important to own. And it's really the basis of wealth. Real estate's like gold and silver. The word real is derived from Spanish. Real in Spanish means royal. Royalty throughout history has always valued land, gold, and silver. The thing that's nice about real estate is you could have the cash and you could technically all pay cash. But what's very nice is this is good debt. Why pay cash if you could get a great loan? For example, say someone purchases their first house for $500,000 and they put down 20%, let's say, they get out of PMI. They put down 20%, 100,000 plus closing costs, etc., depending upon the state. That's how much the closing costs will be in the area. So now he's taking a loan for 400,000. So the beauty of that loan is that it could be at a cheap rate if it's taken at the right time, a very low rate. So, for example, let's say a person was able to lock in at 3 or 4%. That's tremendous because now you could leave your money in the stock market over those 30 years and it will most probably go up significantly more than 3 or 4%. Annually, it goes up around 9%, the stock market over the long term. So that's really free money, even if you could pay, or you could buy other properties with that money. So the beauty of the real estate is that you could leverage the money. You don't need to shell all the money out, as opposed to stocks. You could use debt as money in a good way. And if you're good at doing this, you could become a great investor in real estate because you could use all the extra money for new projects if you know what you're doing. The problem with most people is they use debt to buy liabilities. They spend, people just spend money on other things that don't make them money. That's the problem. So this is the idea over here. Real estate. Real estate, there's a lot to learn about it. And the problem with a lot of people that jump into it, they're not properly educated. And that's why it's losing for most people. That's why. It could be dangerous if you don't know what you're doing. It's a risky game. And if you're not going to be a long-term learner, don't even waste your time. You have to use debt as money. That's what it comes down to in a smart way. Now, depreciation is a very important part of real estate, other than the leverage. It's a legal tax incentives that really anyone could use. It's a tax benefit that allows real estate investors to subtract a portion of the cost of their buildings from their taxable income every single year. For example, let's say a person is an investor in real estate. So now on that money, that income, you need to pay taxes technically. But because of depreciation, you could say, wait, the building was worth 1 million, now it's worth a little bit less because after all, buildings don't last forever. It's temporary. It decreases in value. Cars notoriously depreciate very quick. It's a depreciating item. Cars, real estate also, so you could use that in order not to pay taxes. There's also something called accelerated depreciation. Now, eventually, though, you're going to have to pay. Recapture depreciation, right? You could do two things, and this is what big investors do that are involved with deals that are 10 million and up, etc., or a lot of investors in general. It's all about the 1031 exchange. When you want to sell your property, you never sell it. You sell it to swap it. You swap your property for something else, and then you don't need to pay taxes. That's the 1031 exchange. Or in certain ways, if you bequeath the property, you won't need to pay taxes. There was a New York Times article on October 13th in 2018. By the way, in general, the Times is very twisted in a lot of things that they say and misleading. But this article, there's one specific line that was quoted from interesting. That the writer of the article said, if I had to live my life over again, I would have been in real estate. That's what Jonathan Blattmacher, who's a well-known trust and estate lawyer, said. I'm not sure if I'm pronouncing the name properly. He's a principal at Pioneer Wealth Partners. He reviewed the Kushner documents and he said it's amazing. You get deductions for things that you never paid for. So that basically is what I have to say about the real estate. Inflation ties right into this. During COVID years ago, the government pumped trillions of dollars into the economy. That devalued the purchasing power of the dollar. In other words, what a dollar was worth 3 years ago, it can't get you what a dollar could get you then. Every single year, it gets you less and less. Get you 90 cents of what it's worth. 80 cents, maybe it's worth only 70 cents. So you have to make sure that your investment is outperforming the inflation rate. If your investment isn't, then the investment is losing money, even though it appears like you're making money. In other words, you have to make sure to get your money out of the dollar. Also, our purchasing power decreases. What we buy is worth less. Real estate goes up in value, not because the property gets more value, it's because the dollar gets devalued. The value of the dollar decreases. So many situations, it's not that the property is becoming more valuable. The dollar's just getting weaker, so therefore the land and the property price increase. Now, many times when a neighborhood becomes better, the property's more value in addition to the property becoming more expensive to buy because of inflation. You just zoom out a little bit. In the past 100 years, the dollar lost pretty much all of its value. So, for example, 100 years ago, if you go back 1 cent was equivalent to what a dollar is nowadays, or even less. Just goes down so much. Anyways, that's what I have to say about real estate. Watch the whole playlist.